Doamnelor, domnilor, bine v-am găsit! Urmăriți Lumea diplomatică. În următoarele 25 de minute intrăm în culisele negocierilor și acordurilor ce pot rescrie istoria Europei în următorii 50 de ani. Economia Greciei este dovada că economia unei țări își poate reveni. E nevoie de măsuri fiscale concrete, dar și de investiții, cât mai multe investiții. Despre cum a funcționat totul și ce pot învăța alte țări europene din modul în care și-a revenit economia Greciei după criza pe care a traversat-o, aflați într-un interviu realizat în exclusivitate cu guvernatorul Băncii Centrale din Atena. Your Excellency, thank you so much for your time. Economic ties between Greece and Romania have grown in recent years. Where do you see the biggest opportunities for deeper cooperation?
First of all, I'm so glad to be here in Romania with the historical ties to Greece, which go back to centuries. I'm so glad also that the recent ties are very strong. The ties between our two countries and also the ties between the two central banks. There are many opportunities. There are many opportunities between Greece and Romania in energy, maritime, products, insurance, transport. I would say the future is ours. We should develop networks, I think, and also the history, the common grounds also matter a lot. And the fact that it's a great destination for Greek direct investment says a lot. Look at how many Greek companies are here in Romania.
Greece has gone through a deep financial crisis and recovery. What lessons from that experience are most relevant for other European economies today?
Many lessons can be learned. First of all, the country itself, the economy, the national economy, should be very careful not to enter a situation of fiscal instability. I would say the fiscal situation is the number one concern that we must have now, in these turbulent times in Europe in particular. Second, financial stability. We should be very cautious regarding banking risks. The third are reforms. So this trio, financial stability, fiscal stability and consolidation, and third, structural reforms to increase the potential growth rate of the economy. If you have these three things, I think the economy will go well. Now, if you enter a crisis, not good, then Greece can offer many lessons. There, you should be very careful to combine fiscal consolidation with public investment. You should exclude public investment from expenditure cuts. Second, it is very relevant to take care not only the primary surplus or deficit, but what we call the snowball effect, the difference between the interest rate on public debt and the growth rate. This is that we had neglected in Greece in the beginning, and we had many problems. But when this has been mended, things became much better. Third, the banking system. We should be aware that the banking system is always, it has capital, it satisfies the liquidity ratios. I think these are the main lessons. And of course, above everything else, you must have ownership of the reforms, a political system that understands the changes that need to occur.
What are the biggest risks to financial stability in Europe right now?
As you know now, there is a military conflict in Ukraine, there is a military conflict in the Middle East, so Europe is in between. Europe is a net energy importer, so it faces very high prices of energy, of oil, of natural gas, of liquefied natural gas, a series of products, because these also affect fertilizers, helium, many other products. So we are facing a difficult situation. So far, it tends to create what we call stagflation, that is higher inflation and lower growth rates. We don't have negative growth rates, so we should be aware that we shouldn't have. We should be very, very careful to avoid entering into a recession. But this kind of supply side shock coming from energy usually creates stagflationary tendencies. This has not yet touched the banking system. The banking system has many risks now around it. Non-bank financial institutions that they are not supervised by central banks or national supervisors, or they are not supervised adequately. And of course, credit risks in case that this war continues and has secondary effects in the balance sheet of companies, of households. It reduces wages through high inflation. So that could create a new generation of non-performing loans. So we should be vigilant not to allow this to happen, because if you have a crisis, a stagflation, and then on top of this a banking crisis, the situation will become very, very, very difficult.
If the Strait of Hormuz were disrupted and fuel prices surge, what coordinated response should Europe consider?
First of all, let's hope that this situation will not last, because if it lasts, then we'll be away from our baseline scenarios, which sees slightly lower growth rate compared to the pre-crisis scenario and slightly higher inflation rate, and we'll move to a situation with even lower growth and higher inflation. So the coordinated response should be the release of buffers, especially in oil buffers, natural gas buffers, so we can gain time. But if this continues, then we should try to tackle this in a more coordinated way through savings energy. And for Europe, we should encourage the development of green energy, so that we can reduce our dependency on imported fossil fuels, because this is the major source of problems recently. There's a sequence of supply side shocks coming from the energy, from the energy side, and the fact that Europe is a net energy importer creates much more serious problems than in other countries which are net energy exporters. That's the...
If fuel prices rise sharply, what concrete measures should European policymakers take to protect economies and consumers?
In the European Central Bank, we are advising governments to take measures that are temporary, that are tailored, and they are specific. They are specific. They are not horizontal. So, for instance, subsidies, like the Greek government is providing subsidies now, is not reducing taxes. So try to avoid horizontal measures as much as possible, and to be specific and to be targeted to the real vulnerable groups of households and companies, not horizontal, because otherwise the fiscal situation will become much worse, and we'll have another generation of problems.
To what extent are the effects of the war in Ukraine still shaping Europe's economy trajectory?
It does. Again, on the defense side, developments in Ukraine have shown to Europe that it should be able to defend itself. That's why collectively we have decided to increase the defense spending as a percent of GDP, so that we should coordinate defense even stronger among us. And the energy side also, as I said earlier, is very important. We should try to develop as much as possible green energy. And I don't mean only photovoltaic and wind energy, because we have done serious steps in this direction, but not as important steps in networks. That's why in the beginning I said we should build networks, corridors between south and north of Europe, and also we should try to storage electricity through batteries. I think also so it's not only photovoltaic and wind energy, but also batteries and networks. Of course, Europe now has faced many wake-up calls, all these supply-side shocks, tariffs, war in Ukraine, war in the Middle East. It's time now Europe to think in terms of a more federalist approach to Europe, with issuing common debt, with achieving at last a complete banking union and a savings and investment union. Europe has a current account surplus, which means it saves more than it invests. So these excess savings should be invested in Europe, not abroad. And to be able to do that, we should increase the rate of return on investment by eliminating the still large internal barriers to trade in goods and services we have in Europe, and also create a more liquid debt market by issuing common debt.
How do you see inflation evolving across the euro area in the coming period?
Now, well, inflation had fallen below target in Europe. In the Eurozone, it was 1.9% in February. Unfortunately, now with the crisis in the Middle East, is going to increase. With our baseline scenario, is going to be 2.6% on average for the year. Of course, it could peak at 3%, but then fall. The baseline scenario depends on a price on energy of, let's say, an oil price close to $90 a barrel on average for the whole year. So I'm not talking only now. So if the war ends relatively fast, then we can say that we can be in the baseline scenario, that on average for the whole year, the oil price, the natural gas price, can be according to our baseline assumptions. If not, if the war continues, then we move away from the baseline scenario to the adverse scenario. And if not good, even more persistent crisis, then we move to the adverse, to the severe scenario with a much higher inflation and a much lower growth rate. But in none of these scenarios we don't see a recession in Europe. So let's hope that the baseline scenario holds, and even better, which means the hope is that the war ends sooner rather than later. And same wish I can express for Ukraine, because it's not only the economic and financial cost, but it's also the loss of human life.
At a time when several EU countries struggle with high deficits, what is the right balance between fiscal discipline and economic growth?
Well, I don't see a conflict between the two. The Greek crisis has shown, for instance, during convergence, that we reduced the fiscal deficit and we accelerated growth because interest rates fell. Because when you have lower deficit, you have higher credibility. Interest rates falling, you can borrow. You can borrow cheaper. There is an optimal rule in every case. Every country is different. But now in Europe we have a very flexible stability and growth pact. It's not like the old rigid one. So it is sur mesure for every country. There is a ceiling for expenditure depending on circumstances. And of course, I think the major thing is to make sure that the debt to GDP ratio is falling. I think this is the number one concern that we have now.
What is your perspective on the proposal for a two-speed Europe?
Ideally, we don't want a two-speed Europe. But if there are countries which don't want to follow common sense things like savings and investment union, like banking union, like all the approach we have following the two benchmark reports we have, the Draghi report and the Letta report, then unfortunately we have to follow a Europe of the able and the willing that they can bring forward this change. But ideally, Europe should proceed together, not in a two-speed manner. But if necessary, we should not hesitate to take an approach that the willing and the able should do the right thing for the benefit and the welfare of European citizens.
How prepared is the European banking sector to face a new external shock?
It is quite well prepared because after the crisis, the global financial crisis, they have been recapitalized strongly. Liquidity ratios are now better than ever. We have macroprudential policies. The ECB has become a flexible and credible central bank, which has proven its ability to reduce inflation under difficult circumstances without creating recession or financial stability problems. Let's exploit this situation that the central bank and the Euro system is experienced and able with many tools now in its hands. And second, our banking system is well prepared, well capitalized, with very high liquidity ratios and high profitability ratios.
And it's my last question. What lessons can European countries learn from recent efforts to reduce budget deficits? We have this problem in Romania too.
As I said before, you have now so many instruments to achieve that. For instance, if you do the necessary reforms, then you can increase the potential growth rate, the growth rate, and that can help the fiscal situation as well. You can have a fiscal situation which pays attention to expenditure reform, to investment. There's so much money now coming out of the European Union. I mean, the RRF, the NGEU helped European economies so much, and for the first time, the South converged to the North after so many years. Even Greece, after the crisis now, is a star performer using the new rules, the new Stability and Growth Pact rules. So Europe now is much more flexible than before. And as I say, Greece was, in that case, the midwife of history. Because of Greece, Europe has transformed itself with much more useful tools to stabilize the economy.
Great. Thank you so much for your time.
Thank you. Thank you very much. Enjoy.